Here is liquidity. Here is inducement. Listen attentively, guys. What is liquidity? Liquidity means money. What is inducement? You can consider inducement as trap, deceive, convince, something like that. So now, how do you apply this and how do you differentiate them? Any turning point in the market, remember, we know that we have upward trend, we have downward trend. Now, every turning point in price, money is being invested. So which means every turning point in price, there is liquidity sitting down there. So does that mean, but most of us, whenever we want to trade, a lot of mentors will actually sound like, whenever you see liquidity in a point, that is when you should take your trade. Market takes liquidity. Yes, but liquidity is everywhere. So how do you know the exact liquidity that the market will take and reverse? That is now where liquidity inducement comes in. Because we have seen a lot of areas that people call liquidity, a market clear it and it still keep going up. And we see some that we call liquidity, the market clear it and it come down, right? So the reason actually why we are actually trying to target from a liquidity is because we expect market to grab the liquidity and reverse, right? So which means liquidity is not what actually revises the price. It is inducement. And an inducement is a form of liquidity. So what is an inducement now? So look at this story. Now we have a situation like this, a consolidation market. This is what? This is liquidity. Because these points, money is involved. But a simple change will be done to this, and this whole thing will be changed to an inducement. And what is the change? That is now when you have this. The process of this guy breaking structure has made this point an inducement. Why? Because the fact that it has broken structure, it will deceive a lot of people to forget the fact that there's a lot of liquidity sitting down above here. It will deceive them, which is like a trap. Then they would think the market wants to sell from here. Whereas the market only broke this structure just to create more reason for people to sell here. Whereas this is the process of an inducement. That the market will take them out, then what? Start to sell. So this scenario, you can see the difference between liquidity and inducement is liquidity does not force you to do something else. But an inducement would force you to change your plan. You forgot that there's liquidity sitting down here. Now you see this as a demand that broke structure. Without knowing that there's an equal lows here, then the market will what? Clear you out, then start buying. That is the real definition about an inducement. Now let's go to our chart to explain that. Looking at this chart here, what is liquidity? I'm coming, guys. Liquidity, like I told you guys, every turning point in the market is liquidity. Every single turning point in the market is liquidity. Every turning point. Every turning point. So this is not an important factor for us to be able to use to understand how to trade. But now let me identify inducement for you. So now looking at this pattern, looking at this story, now you would ask yourself, why didn't I buy from here? It is because this point is an inducement. Why? We have market did this. Okay, I'm coming. Okay, let me redraw that. Okay, this is correct. This is correct. Now, this is our demand. I am buying from here, which is right here. Why am I not buying from here? The reason I'm not buying from here is because this is an inducement. An inducement is a point that market puts very close to your point of interest to force you to do something else, whereas the real thing that you're supposed to do is still below the price action. So now, market can come give you a demand right here. The market will come, break structure. Now, the process of this break of structure has created an inducement where a lot of people want to buy from here. The market will take them out, then buy. So that is inducement. So you cannot call a point an inducement if that point is not forcing you to do something else. If that point is not giving other traders reason to enter. Look at this area. If we want to identify structure, we will say low, high, low, and a high. So a lot of people see this as a reason to buy. Now the market came, took them out, and buy. That is why I bought from here. The same thing here. I have my other block beautifully here. Now, a lot of people will see this as a buy because this guy broke structure. So now that is an inducement. The market cleared it, then boom, started buying. The same thing happened here. We have high, low, high, low. A lot of people wants to sell from here, but the market did what? Come above it, then drop. So if you want to understand this thing better, go and watch my concept of ABC, because A is your POI, B is your inducement, not liquidity. Then your C is your target. This is the concept. So whenever you mark a point as an inducement, that simply means that point must have been giving other traders reason to enter. So you have to know the difference. There is big difference between all these things. Very, very big difference. Okay? There is very, very big difference to all these things. I'm coming, guys. There is very, very big difference to all these things. So you have to understand it. Okay? So now let me make the final illustration regarding this for you guys. So now look at this. Let's use trend line as an example. Now we have trend line. Now, if you want to trade this trend line, what is an inducement? A lot of people wants to buy from here. Now, you put your line, market took them out. Come to a demand right here, then buy. The process of that simply means an inducement has been taken. But whenever or you have an equal lows in a range, this is your POI, and your equal low is like this. This is liquidity. Market can take it and continue selling. But an inducement is when you have your POI, you have your equal lows, but your equal lows break structure. Now, this process of people thinking this is a break of structure or a breakout, and they want to retest, has made this point an inducement. Then the market will buy from there. So that is that about that, guys. Thank you very much.